It is yet another massive day for us. I hope you're excited like I am. We got earnings out the wazoo today. Obviously, some from pre-market we need to talk about, but we're going to start here today talking about Facebook. Just reported earnings after hours. The stock's up a nice 5% after hours, so obviously kind of a shocker for me. This company has been one that's been unfavorable in terms of response to earnings reports over the last little while here. They've been consistently posting up ridiculously good numbers, yet earnings beats every single quarter, by the way. Yet still, they always seem to fall down after hours. I never see how that was possible. Here, though, a positive reaction, actually. You look over the last year, the stock's gone up quite a bit, no doubt, 58%. All things considered, I do think that's quite low compared to the rest of the market. A company like Facebook that is trouncing most companies that have gone up higher than it, I do believe it's a little bit unfair in that aspect. But let's take a look at these earnings. I'm expecting some great numbers. Obviously, we know from other companies that ad rates have recovered above and beyond where they were pre-pandemic. So it's really nice to see that. Which is going to be fantastic not only for a profitability standpoint for them, it's going to be amazing, but the revenue line, I guarantee it's going to be a pretty nice beat. Let's take a look at it. This is what I call nice stuff. GAAP EPS coming in at $3.30 is a beat by 96 cents, nearly a dollar beat on a profitability standpoint. That's really nice to see. That's really nice to see. A beat by around 30% of what good grief, what can you expect? That is nice, personally. Yeah, that's a fantastic number. And a revenue line, which is incredible in my perspective, $26 billion, up 47.5% year over year. Beats by $2.4 billion. I thought this was going to be a $1 billion beat, as I said in my earnings video last Saturday. This is a $2.5 billion beat instead. Now that is freaking beautiful. Daily active users came in at 1.88 billion compared to 1.89 billion consensus. And monthly active at 2.85 compared to a 2.86 consensus. All things considered, that's a pretty minor detail. Still growing those user numbers is incredible. It's really incredible to see that. To see a company like this still having consistent user growth, as we'll see. That's incredible. Good grief. Yeah. Let's take a look at some of the finer details, okay? Strong digital ad recovery, obviously. Total revenue jumped 48%. Operating income nearly doubled. Net income rose 94% to $9.5 billion of net income. That, I don't know how it's feasible. Again, I talked to you about how these companies have such good potential for profit. Facebook is the prime example. $24 billion of revenue, 9.5 of that was pure net income right into their bottom line. Good grief. What can I say? Right into the bottom line. That's beautiful. Just being honest. From my perspective, that net income it's ridiculous. I don't know how that's feasible. About half of what they're bringing in revenue is coming right back to them in pure profit. That's nice. Mr. Robot, Mr. Zuckerberg, I should say, says that we had a strong quarter as we help people stay connected and businesses grow. So good for him. Ad revenue rose 46%. Not a shocker. We expected that. Other revenues jumped 146%. And other revenues really include stuff like Oculus, which I'd like to see if they break down exactly what that might have been. They typically don't, but maybe. It's really nice in terms of that line, though. Good grief. Operating margin up to 43% now compared to 33% of a year ago. That's goodness. And daily active users still rose 8% in this quarter, which I think is incredible. And monthly active rose 10%. Family daily active people rose 15%. And family monthly active people rose 15% as well. I don't know what you want me to say there, but those are ridiculous numbers out of this company. I mean, good grief. It's ridiculous. Ad revenue growth was driven by a 30% increase in average price per ad. Good grief, that is nice. Along with a 12% gain in number of ads delivered. So more ads and more expensive ads. As we saw, it's really about the ads being more expensive. Here, we look at the slides. We always do it because you just see this chart and you get shocked sometimes. Daily active users here. Consistent growth. I love seeing it. In every segment. I mean, every single area of the world saw consistent growth. I mean, it's good. It's good to see. Monthly active users. Guess what? Same exact story. The growth rates here are quite incredible. For a company of this stature, the fact that they're able to continue to grow like this is crazy. Average revenue per user grew quite a bit year over year, obviously because of a decrease in advertising revenue. Family daily active people up, family monthly active people up, family average revenue per user, believe it or not, yeah, that's up year over year quite a bit. Revenue as a whole, again, you see this other revenue, which is pretty significant. They had a nice Q4 in terms of other revenue. And again, obviously, ads make up the vast majority of the business, but it is really nice to see this this number. I mean, you're thinking about 26 billion. That compares to 17 billion last year's quarter. That is unprecedented levels of growth, even for this company. To grow by that significant of a margin. I'm actually freaking ridiculously impressed by nearly a 50% gain in revenue. This company typically floats around 30%. So it is beautiful to see those numbers with a significant beat. Obviously, other revenue. Look at this, other revenue growing everywhere too. I mean, the last 2 quarters have been crazy for this. I want to see what that breakdown necessarily looks like in terms of product. Income from operations, also significant growth year over year. And just overall in a really good spot compared to what has been over the last couple of years. Operating margin in a good spot again as well. Effective tax rate expected to float around 17% here is where it's sitting. Not that bad. I can't lie to you. Obviously, it's probably going to go up here in the next little bit. Net income line. This is a beautiful chart too. You're comparing 4.9 billion this quarter last year. That compares to 9.5 billion this year. I mean, that's incredible net income. This company prints money. I've said it all the time. It's a money printer. It really is. Now, capital expenditures did increase year over year, but again, mostly I don't know if I mind that because of the fact that they grew revenue by such a large margin, and overall year over year, not a significant increase, all things considered. I don't know. No, we got to go to the press release for what we like to see. I do want to see real quick if the others. Other revenue, not necessarily saying anything. No, unfortunately not. It doesn't go into other revenue, unfortunately. I do want to see a breakdown of that, but we'll see what that looks like. Only a 3-month comparison on the balance sheet. I'm okay with that. I'll take it. Total current assets on this company. This is by the way, I mean, I already know it. It's a grade A balance sheet. This is what companies want to model it after right here. $77.3 billion in total current assets compared to 75.6 of 3 months ago. Growth in really cash and cash equivalents looking pretty good. Total assets in general at 163.5 billion compared to 159.3 billion. Good growth there. Total current liabilities. This is where you get completely shocked. I don't know how this is feasible. $12.7 billion. That's right. That's comparing to $15 billion of the quarter prior. It decreased, right? They sold down and they still grew assets by a good margin. Total liabilities at 29, nearly 30 billion, compared to 31 billion. I mean, they decreased total liabilities as well. And not to mention that $30 billion in liability Total assets at 163 billion. That's beautiful. We're talking about a stockholder equity of 133 billion dollars. In just 3 months, they increased by $5 billion on this line. I mean, it's incredible. The company prints money. This is a grade A balance sheet, and I think Facebook it's a ridiculous screaming buy to me. Good grief. I don't know what more I could say about this company. I've been selling it for a while now because this thing is completely underpriced compared to the rest of the market. Completely underpriced. Market cap at $870 billion. For a company bringing in over, the company brings in over $100 billion this year, and their market cap sitting at $870 billion. A company growing 40% in revenue, a P/E ratio of 30. A P/E ratio after today is going to be even cheaper, frankly, after a blowout in that earnings perspective. How is this company priced at a P/E under the S&P 500? This is the company that is priced cheaper than the S&P 500, and it is growing revenue above 30% every single quarter historically. And net income line, ridiculous. Literally grade A balance sheet, the one you want to copy. I can't lie. I can't say anything else. Facebook, you got to buy it. I mean, this is an investment over the next 5 years that'll make you a lot of money because this is a completely underpriced stock. Underpriced compared to the rest of the market. I don't think anyone can say that. If we're looking for value plays, Facebook, this is a growth stock, yet it's somehow a value play. I can't believe it. And when this company grows into maturity, which, it's getting there, this is a company that has a lot of capital in place to pay a dividend eventually if you're a shareholder of this company. There's a lot headed for this company in the future. I really think you need to go ahead and definitely buy this one.